Good morning, everybody. It is July 12th, or excuse me, I think it's July 12th, 2017, and we're talking about what's hot on the open here at MarketStream.live. My name is Joe Cusick with the Cusick Group Securities offered by MoneyBlock. And folks, well, we are seeing all-time highs. What do I mean? All-time highs in the Dow Jones Industrial. It's the headlines that you're going to see at all the major media outlets, but I really, hey, impressive. But we're walking into earnings season, and really right now what you need to be focused on is not the enthusiasm behind these all-time highs, but you got to be looking at your portfolio, your quantitative risk, and most importantly, your comfort level with where we're at. For example, headlines going all over the place. Trump could be impeached. I mean, the market, as far as it's concerned, doesn't care. Look at volatility. Volatility is trading down 4% at $10.40. Folks, we're getting close to single-digit implied volatility, and we're talking about our president potentially being impeached. With the headlines that came out with his son meeting with some Russian diplomat or Russian attorney, and who knows, who cares. Bottom line is that I look at this stuff, the headlines, it's noise behind me. This will give me a barometer of what that noise means. And right now, it's not meaning much in the markets as far as negative connotations. The markets right now, the Dow Jones trading at 21,565. Previous high was 25,561, went through, and it was trading at 25,562. Got as high, the DJI got as high as 25,580. We have all-time new highs. Watching it, though, bounce off of that 20-day moving average, that's impressive. So we have a catalyst. We have earnings coming up. There's heightened expectation of big moves in stocks. There does not seem to be any natural sellers at this point in time. Everyone's hanging on to what they have. Taking a look at the S&P 500. The SPX is trading, that's the cash flow index, up 18. Again, broke through the 20-day. It was in a grind and in a battle, and the bulls are winning the battle. And that's what's notable here is that the bulls are winning to the upside, and we're going to watch these critical levels. On the SPY, which is the ETF that tracks that, you're going to watch now the 241 level. That's a critical level for the bulls to hold. It's trading right now at 244. Watch 242.5 as the next level of support and any pullback. But right now up 0.7%, 0.75% right now, up 179. Impressive move. And this move is despite the fact that we are seeing large cap tech giant Apple down about 0.25%, down 0.27%. That's 32 cents at 145. In a battle zone, this is one of the stocks that's lagging, and this is a stock that basically has been the leader as well as the one of the stocks, the part of the FANGs that has been historically carrying this market on its back, and that has been lagging. And we're seeing that tech. The rally is not as pronounced as you've seen with other of its large cap brethren. The Nasdaq is trading up 51 points, which is impressive, almost 0.9%. But you could see it's slightly compressed. And as I had noted, Apple is not joining the party. Let's watch the Qs here. That's the ETF that tracks the Nasdaq, trading in a compressed style as well, up similar to the Nasdaq 100. And you can see the Qs bouncing above that 20-day. I use these moving averages, folks, just to give me context. Who's in control? It helps me strategically as well as emotionally. Not that it gives me any kind of future forecast. That's why I focused on implied volatility. This just gives me perspective. Taking a look at the small caps are really what's leading the way right now. The Russell 2000 is moving to the upside, and in full disclosure, I do have my clients in a position in small caps, moving to the upside in advance of earnings. And really what we're going to be watching is finance. Next week, we're going to have some large cap finance names, everything from Bank of America to brokers like Charles Schwab, Wells Fargo. You also have some regional banks. The Bank of Ozarks, which is considered a small regional bank. They came out, their earnings were in line. Basically, they came out with right in expectations. And so there's no ripples at this juncture, and the market is taking off. And you can see that small caps are leading the way. That is a positive for the bulls at this juncture. Now, the crude markets, I'm going to watch this very closely because in about 5 minutes, you're going to see that the EIA report is going to come out. Now, the API report on storage, oil storage came out. It was a draw of over 8 million barrels. We're going to see if that actually coincides with the EIA number. Last week, they were aligned with the EIA came out, and there was a draw of over 6 million barrels. We're going to continue to watch this because what has been a drag on the crude contract is, yes, they've had a draw. In other words, they're pulling from the storage, but the increased capacity and production here in the United States. As crude keeps staying above 45, 50, their production has continued to increase. Let's see if that continues. In full disclosure, I do have a position on for my clients in oil. Taking a look at gold. Gold is up $4.30. Been beat up for the last couple of weeks, and you can clearly see that in a downtrend overall, but it is up today $4.60. That's interesting to say the least, since we see that the markets are up and hitting all-time highs and gold is coming off of its lows. You're also seeing crude or copper, the non-ferrous metal that really is a good barometer of infrastructure plays, growth in that segment, in that sector, as well as in the materials sector, up about 0.4%. Now, what's interesting here is that it continues to move to the upside, but we need to see it break through that 270 mark. We said the 266 to 270 mark is going to be a critical level, but this is a metal that you can watch to get an idea of how the markets are feeling about growth in that materials industrial sector. Taking a look at bonds, moving to the upside. Bonds are moving up in conjunction with the markets. Now, that has not been those markets have been highly correlated. What does that mean? So when markets go up, the bonds go up. Except for the last couple of weeks, you've seen that bonds have come down pretty precipitously, have bottomed right here. It looks like bond bears on the price side. In other words, bond prices going up means that people are buying bonds and not selling them. That means yields are going to come down. Let's see if that starts to put some pressure on the financials, or at least at this juncture, it's not going to put so much pressure on the financials as much as it's going to put scrutiny on their earnings. So we're going to watch this very closely, because while the rest of the market is up anywhere between 0.5% and 1.2%, whether it's small caps or large caps, you're seeing that the finance sector is up about 0.4%. And it's a modest move, but it's been starting to trend a little bit to the downside, holding up. So we're going to watch XLF, watch 2457 on the ETF. If it starts breaking there, that could put in some pressure and some potential volatility into that sector. So we will be watching those earnings announcements very closely starting tomorrow and into next week. Taking a look at the 10-year trading up right now, about almost 0.3%. But what I want to look at and what's notable is I want to look at the 10-year yield. You can see that it's dropping now pretty precipitously. It's down to 2.32% off of its highs the last couple of sessions at 2.4. So you're seeing that bond yields are coming off. When those yields come off that steeply, you got to watch this. The markets and the institutions that are really going to benefit from yield increase in the bonds, they need to see this thing well north of 260, challenging that 3% level. And that just doesn't look like it's in the cards right now with the current activity. Bonds going up and stocks going up, while it's not an unusual correlation, it's one that's notable, especially going into earnings. A couple other things, watch the airlines. Now, in full disclosure, I do have some exposure to the airline industry for the clients, but if you take a look at Jet, there are a lot of airlines that are going to start to release not only earnings, but also data. Delta Airlines is going to be releasing their earnings tomorrow morning. Expectation is around $1.66. You could see that I think it's Jets. Yes, apologize. JETS. That's the ETF that tracks global jets, airlines. And you could clearly see that it's been grinding, moving to the upside. We had some data out this morning. Obviously, with the low crude prices, that's going to impact and be a positive impact on potential jet fuel costs. Also looking at flight miles and per seat and the revenue based on that. You're going to start to see those numbers. We're going to watch this very closely, and specifically we'll talk about today at noon. We'll talk about Delta and going into earnings. We'll look at what is the expectation there, and we'll do that this afternoon to give you some context and help you understand how in this cycle, in the earnings cycle, how you can start looking at stocks, set up expectations going into the events so it's not just such a blind event for you. And I think it'll open your eyes and see how simply you can look at things and get context about where stocks can be moving, where markets can be moving in an event like earnings. All right, folks, that is it right now. Markets hitting all-time highs and volatility really starting to peel off. Bulls are in control. Let's see if that continues throughout the day, and keep your eyes on MarketStream.live. We'll see you this afternoon.